Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Please don't forget to like and subscribe. Click the bell so you get a notification of when we're releasing a new video. I'm sitting today again with Willie Pelser. Welcome, Willie.
Good morning, Robin.
So, Willie, hopefully we're not going to talk about duct tape and shoes today, but yesterday the MPC, the Monetary Policy Committee, met. We had a 25 basis point cut, 0.25%. We kind of expected that, but we're more interested in what they said with it to understand the detail. So what was the detail?
Okay. Well, before we get to the detail, we've been waiting a long time for this. So it was, historically, it's almost like watching a soccer match. It's moving, and just as the O goes to the goal, the spectators go forward and say, yes, 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 but then he misses the goal. We've missed the goal a few times in the last probably 18 months of cutting. So first of all, thank you, Lesetja, and thank you for that one member who wanted 50 basis points.
Yes.
Robin, we finally received a rate cut, and as I say, it's like a sports spectator. It's a real moment for us, for the country. The reason, there's various reasons for it. I think the one narrative that they've been playing along was being conservative. We need to protect the price stability in the economy and all of those things. But leading into this meeting again, we've been seeing inflation dropping to like 3%. 2.7, I think, was the last number. And then the other thing is the consistent downgrading of expectations around the economic performance in South Africa. Even the Reserve Bank's latest statement, they dropped it down to 1.4% GDP growth from also 1.6 or 1.7. So, I think it was a case of we need to help now more than ever before. But I think there's more to the story.
Yes, yeah. So one of the things that's sort of been part of the narrative quite a bit is this, Lesetja keeps talking about he wants to lower the band. So we've been on the sort of 4 to 6% band, but now he's talking about anchoring it lower. Yeah. And there seems to be quite a bit of debate around that. So maybe we can explain for the viewers what's his philosophy for wanting to do that? Is it just a vanity thing, or is there some economic merit there?
Yeah, Robin, I think to put it into perspective, these type of policy things take years to get through the system, if I can call it that way. So we need to take a step back to when we introduced the 3 to 6% band. Remember, we had inflation, double-digit inflation, many decades ago. Yeah. And the aim of the Reserve Bank at that point in time was, yes, we need to get the overall price level in the economy lower relative to our trading partners. So that was the reason leading into doing that. And then over time, yes, we've been fluctuating between this. South Africa is an emerging market economy. We're exposed to external flows, currencies and everything. But we've managed to get this over time into this band. And in the last year or so, the narrative also changed by saying our partners, and we exclude the COVID period and all of those things, are at inflation levels on average between 2.5%. So if we can reduce that inflation band, South Africa relative to the rest of the world, it will install price stability again. It might not protect the rand, but it will get the rand also in a more stable level. And those are all things that we want for the economy. Ease of doing business at a lower cost of capital principle. The rand is not showing you all these wide gyrations around the level and so on. So that's actually what they've been doing. And it's interesting, if you study inflation expectation theory, is start talking it down. And we've been hearing this story for a long time, that they're talking it down, because it convinced you and me as business owners to ask the questions, why are we paying more on the income side, on the cost side of the economy? And that's what businesses have been trying to do. So yes, it brings that into the equation. Also, a huge reset in your modeling. Yes. So what the Reserve Bank has, they do have a massive econometric model. So it forces you to go and look at your assumptions. It forces you to go and look at what you use as input factors and so on. And one of them for a long time has been oil, I think in their model was mispriced. So their expectation of where the average oil price level sits was somewhere between 80 and 100. And this has forced them, not just because of the latest move, but that's almost your worst case scenario. They priced in as a best case scenario.
Yeah.
There's one example. So in this modeling, I think it just showed us that we're closer to a 3%. The initial talks was 4.5%. Now, in yesterday's comments and so on, they did say, listen, we think closer to 3%.
Wow.
Interesting, Robin, when you look at again, if we go back to all their meetings and see where they think inflation will be in a year's time and in 2 years' time, it's a constant downward adjustment from their expectation perspective. So again, for next year, they're expecting inflation to be lower than last year. So it's all part of this thing. So yes, the consumer can say hurrah. And we know the interest rate cut doesn't just doesn't affect the lower income so much because they don't have all this debt. And so, and yes, they are exposed to loan shocks in principle and so on. So everything helps. 25 help, especially when the petrol level is going up. So there's help in the system. Hopefully the economy will not be at 1.4 but at 1.7.
Yeah, that would be nice. Yeah. Just very quickly, I mean, you talked about the rand, you talked about the oil price and the outlook for inflation. And the rand's now under 18 again, which we haven't been for some time. So the rand has been on steroids. The dollar price of oil has been pretty stable around the mid-60s. This is really underpinning. That's not a pipe dream to see lower inflation going forward if that's the case, isn't it?
Yeah, and I think, again, Robin, if one analyze the world economic system, it's difficult to see why oil should be at 100, argument's sake. So oil could be stable at this level, give or take $5 a barrel around a sort of an average rate. But that brings in itself price stability. Yes, the wild card remains these tariff principle. Is it on, is it off? Yeah.
So time will tell. Willie, thanks for giving us that insight. Thank you for joining us. Please don't forget to like and subscribe, and we'll catch you next time. Bye-bye.